Welcome back, everybody. It is Tuesday night, and this is Vetted VA Live, a very important topic tonight. Over the last few years, we're seeing a larger percentage of the market of home buyers choose new construction over existing homes, largely due to a lack of supply of existing homes, some decreased affordability there. Builders are able to sort of adjust a little bit better in terms of building smaller homes, maybe less upgrades, and cater to that market. So we have, as always, a group of Vetted VA pros here to talk through the topic. Tonight, we've got two great realtors and a lender, and we're going to go through both sides of that. We're going to talk about the real estate implications of using your VA benefit to purchase new construction, and then we'll close back with closing that loop in terms of what different comes into play on new construction and using your VA financing, and we'll go through all of those questions. So with that, I am joined tonight by Alexis Brown in Memphis, Tennessee. Do I mention that she always tries to claim she's from San Diego, even though she's in Tennessee? Claudia Overson in Apple Valley, California, here in Southern California, and Andy Trano in Minnetonka, Minnesota, probably suffering from some high humidity right about now. Are you, Andy? It's a little warm?
It's been, ridiculously warm. Big storms yesterday from all the humidity, but that's all right. It'll be snowing in a week or two.
Oh, yeah, that's something to look forward to, right?
Exactly.
All right, let's just jump right into it. Alexis, this is the $24 million question, the one we get all of the time. And there's some questions behind this question. But if I'm a buyer, veteran or non-veteran, and I want to go out and buy new construction, it's like walking into a showroom. Do I really need an agent in that situation? Or am I cool to just go in and wing it and handle it myself?
All right. So, hello, everyone. You don't always need an agent, but I will say this. If in any real estate transaction you need your own representation, it's absolutely new construction. Understand that the builder's rep, the builder's agent, works for the builder. Now, sometimes in pre-existing, when their home's like on the market, just like 123 Banana Street, right? You go in, you can maybe talk to the list agent, work with the list agent. Obviously, the list agent is employed by the seller. Yes. However, when you're building from the ground up or just going into new construction, there's a lot more that goes into building a house. Permits, codes, excess funds, things that just don't exist in a traditional transaction. Keep in mind that builders have one concern, and that's their bottom line. Okay. They're in the business of building houses, so they're going to do whatever they can to get it done. Make sure in new construction, if possible, you get your own representation just to protect yourself.
Claudia, what are your thoughts on that?
Oh, I totally agree. I mean, there's been times where having an agent actually save the buyer money that the builder had promised initially. And then, through the shuffling of paperwork, somehow that got missed. And if they didn't have their own representation, there would be nobody to say, hey, where did that money go that you promised in the beginning? So it's an added layer of accountability on both sides as well to have your own representation.
Because builders write their own contracts. That's something very important to understand in the majority of states, okay, and in the majority of builders, they're writing their own contracts. So a lot of times in new construction, people say, hey, you might talk to the builder, the superintendent, the builder themselves, or their agent. And there's a lot of this going on, a lot of conversations going on, right? If it's not on paper in real estate, nothing's official. You have to make sure that when you're having these conversations with builders, superintendents, a foreman, their agent, the builder's rep, whoever, it's in writing. It's in that builder's contract. And those contracts are typically thick and very complicated.
That's what I was going to say, Andy. From that perspective, if you get a contract over someone buying an existing home, how many pages is that contract in Minnesota?
Yeah, I was going to say a normal purchase agreement, 17 to 20 pages. I get those new builds, and they're 70 pages. So it's significantly longer. And what our realtor friends, the ones that they don't see are the ones that are the biggest problems. So a lot of times people will come to me as the lender, and they're not represented, and they have this huge contract that they don't understand. And now I'm not a realtor, but they're asking me questions where I'm trying to put a realtor hat on, and that's not my area of expertise. And I can show them certain things, here in Minnesota, for example, there's a transfer tax that's normally paid by sellers. No builder actually pays that. And a lot of people who have bought multiple homes before don't realize that and don't realize their closing costs are higher. And that's something that's not going to change if you have a realtor, but at least you're going to be a little bit more aware when you walk into that contract.
Well, from myself being a lender and not a realtor, we'll talk to people and say, hey, you're approved for this, and here's how much cash you have to have at close. And then they come back after the weekend and say, hey, great news, we found a house. We go, awesome, send the contract over. And instead of the 14 pager, we get the 400 pager comes over and go, oh, you bought new construction. We have a couple of things that are different here. Transfer taxes and title insurance. Generally, you're going to be paying for your own title insurance. It's going to be a couple thousand, $2,000, $3,000, $4,000, depending on where you're located and the purchase price. And people just aren't familiar with that. So when Alexis, what are the extra 80 pages of that builder contract? What are some of the important things that you see in the builder contract that a buyer needs to be aware of, or that you're going to be pointing out to your clients when you're going through that contract with them?
All right. So obviously price is incredibly important, but also deadlines. Okay. Deadlines such as closing date. A lot of builders, and this is me only speaking from my professional experience for the real estate transactions I've been a part of. A lot of builders include verbiage stating that they can go past an estimated closing date due to weather, act of God, material shortage, things like that. During COVID, we saw a lot of delays with new construction. That's incredibly important. Also, verbiage surrounding non-refundable deposits, design center costs. I know we'll cover here shortly. That's going to be included in there. Also, verbiage such as builders sometimes say buyers or the whoever bought the house can't say anything negative about the builder publicly without being sued. Right. So no bad reviews. You can't go leave no 1-star, because everybody runs right to Google when you're researching builders, just like you do with real estate agents and other professionals. So that's important. Also, HOA. That is going to be very important too to zoom in on. Oftentimes when the subdivision is being built, depending on what phase you're buying into, there may already be an HOA intact, or there might be an HOA that's still controlled by the builder. Get in, especially if you're active duty, moving on orders, get in, understand what those HOA bylaws are before signing the contract. Make sure that if there's a rental clause in there, or do they allow exception for military? Do they allow a shed? Do they allow certain dog breeds? All right. Or is it age restrictive? There's lots of things that you need to understand. So HOA, and I know that could vary state to state, but new construction, oftentimes in my area, until the subdivision's 100% complete, the builder oversees it. So that's something else very important to understand.
So all those things that you mentioned that are added on, that are additional to a new build contract, I didn't hear one thing that's there to protect the consumer.
Nothing, because everything is written to protect daddy deep pockets.
Yeah. Well,
maybe it would be a good idea to have someone on your side that has a fiduciary responsibility to look out for you and not the builder.
Exactly. That's why you need to hire, if in any transaction, get an agent, it's definitely going to be in new construction. But with that being said, get an agent. Sometimes agents just drop you off at that new build site. You never see them again. Okay. Make sure that when you're interviewing agents, you're considering new construction, that it's going to be an agent. You establish checkups on the property, especially if if you're building from the dirt up. You might want to go out to the property and visit it once a week. Often builders have no trespassing clauses written into their contracts. You can't just pop up on the property. Some of that has to do with safety concerns. But when you're researching agents and you're interviewing them and you're considering new construction, please do make sure you set that tone and expectation for when you want to meet at the property with your agent and what kind of updates you're looking for.
The thing that jumped out at me while you're saying the builder has all sorts of outs. So Andy pointed out it protects the builder. And let's talk about just our standard contract. Whatever association of realtors in your state writes that contract, there's some differences there. They want to protect the consumer, because imagine there's two realtors, generally one representing the buyer, one representing the seller. So one or both of them has got sued at some point in time. So their association of realtors says, how do we protect against that? How do we make sure this contract covers that? But you can get yourself in trouble as a buyer's agent by not protecting the buyer, as a listing agent not protecting the seller. So everyone's kind of covered. The associations of realtors, their lawyers are saying, how do we write a contract that's not egregiously in one person's favor, covers everyone's butt, and keeps all of us from getting sued? From the builder's perspective, they also don't want to get sued, but they give themselves all sorts of outs. Alexis, you were talking about the timelines there. The builder can go over on anything. Does a buyer get to go over and miss any of these deadlines?
Sometimes they can, but not without penalty. Pay attention to that in the contract as well. Let me just kind of start with this. Consult your agent, go line by line. Sometimes it's best to do this in the model home with the builder's rep. Go line by line with that contract. There's a lot of information. I've seen stuff saying that if you're delay a day, you have a $500 fee added. So that's $500 more that you're gonna have to bring to the closing table per day. So let's say if somebody gets sick, they don't even care if like your wife's in labor about to have a baby. They want their money because they're carrying a construction loan. They want to close.
Well, so I think we all agree that despite the fact that you could go into the sales office, write up a contract, represent yourself, you're probably not going to get any better deal. They're not going to give you a discount for that. But we're about what, 7 to 10 days into this new world of real estate where, per the NAR settlement, a seller isn't necessarily going to have to pay. So if you decide, hey, I want representation, again, we're only 7 to 10 days in this. We don't know how this is going to shake out. And every builder, just like every other seller, is going to have to come to their own conclusion of the best way to handle this. But Claudia, if I want you to represent me, I go to buy new construction, how do you get paid?
I would say we still, well, as a member of the National Association of Realtors, we would already have that in place because I have to have that buyer broker agreement before we even go out. So with me, a lot of my clients start out looking at resales, and then we just can't find what they're looking for in the resale market. And so we go to the new construction. So, and I've sold plenty of new construction. I'm signed up to all of their emails. So they are still sending out emails to let us know if they have broker co-op or not, at least in my area from what I'm seeing. And I do new construction all over Southern California. So I haven't seen anybody not offer that so far. But again,
so the compensation can vary, but most builders, as responsible sellers, saying we want to move this, and we realize most people do want representation, and they're still at this point, most builders willing to pay for buyer's representation.
Yeah, and it just depends on the builder and the community. I mean, I've been to a community that had compensation on only certain models. So it's kind of like the standing inventory that they're trying to get rid of. Those are the ones that they're offering, and maybe others they're not. So it really just depends on the builder.
And we're going to talk about builder incentives, but why do builders give incentives, whether it's design center upgrades, closing costs, any of that? They do it because they're having a hard time moving product. So if they have 1,000 people standing out front wanting to buy the 5 units they have available, they might say, I'm not working with any realtors. I don't need to. I have 5 of those 1,000 people will come in and I don't have to pay anybody. So it is that supply and demand issue. Most areas we are still seeing all of those things being available, but it does come down to just how desirable any piece of dirt and the beautiful home that these builders are putting on it come down to. So Alexis, on a new construction, the deposit process, how is that different than on a standard purchase where I find Andy's house and I want to buy it, and Andy says, cool, I need a $10,000 good faith deposit that shows that you're serious and not going to run off in the night and leave me stuck under contract? How do builders handle that, and what are some of the differences there?
Okay, so often, depending, also understand this can vary builder to builder, and what Claudia was just talking about with commission, house to house. Some of those homes that are already built, sometimes builders call those market homes, so ready to go homes. Okay. So pricing for your deposit and your earnest money can vary lot to lot and home to home. Okay. I have seen stuff as little as $1,000 for everything. You're good to go. I've also seen as high as like 50,000. And this is including for VA buyers. Okay. So again, make sure you read this carefully. Sometimes those deposits that was just mentioned by me a couple minutes ago might be non-refundable. This is where builders sometimes sneak in and say, certain things are non-refundable with the VA, right? Like earnest money. But sometimes I've seen where a builder will charge $100 earnest money and $50,000 builder deposit. That's non-refundable. So those are the deposits. Now, also, if you kind of get into the design studio, this is like where you go into the showroom and you can pick out if you're building from the dirt up or if the builder's allowing you to add any structural upgrades, flooring, whatever to the house, right? Light fixtures, things like that. When often for VA loans, when you go into the design studio, a lot of builders will want 100% cost up front. They do this kind of because they're concerned about appraisal. It's very hard to convince a builder, the home won't have a VA appraisal problem. So understand that for a lot, it's 100%. I've also seen 50% for conventional and for VA across the board. I've seen maybe one or two builders where they'll have maybe 25% or no cost, depending on what you want. But understand that sometimes when builders are wanting these extra funds for design studio, it's because if you pick something really wild like purple cabinets, try not to build, the builder's like, we just put in, $25,000 purple cabinets because you like prints, okay? And the next person might not like it like that. So that's kind of some of it behind why they do the added cost. Be mindful when you go into those design studios because you could get like really guys, you get really excited. So kind of be mindful, take your time. And let me add on this with the design studio. I have started to see a couple of builders in my area, I can't speak for all areas, but in my area where they are charging buyers by the hour to be in the design studio. Yeah,
that's wild. That one's wild.
Greedy money, honey. That's what they want.
Andy, I know from the lender side, the design studio can be a scary thought for us. You have a buyer that's qualified. Hey, no problem. We get you pre-approved for 400,000. They go put a contract together for 395. What happens when they go crazy with the $25,000 purple cabinets when they go to the design center?
Well, first off, Minnetonka here. I appreciate the Prince reference, hometown hero here. So yes, we like the purple cabinets, Vikings, Prince, whatever your thing is. But that's great that you spent all that extra money. However, we're only going to lend on the lesser of the contract price or the appraised value. And it is easy to go in there and to get that nice trim and to get the cabinets and upgrade the bath and all of these cool things that you see when you get excited in there. And all of a sudden that $395,000 house that you bought only appraises for $350,000 because sorry, you did all those upgrades. It's a $350,000 house that doesn't fit with the comparables in the neighborhood. And all those upgrades, as nice as they are and as expensive as they are, they're just not worth it when it goes on the resale market. And that's what we're looking at. Any appraisal, whether it's a new build or whether it's an existing home, they're going to price it based off of what comparable homes are selling for. So all of those upgrades may not necessarily translate to your appraised value.
I'm just thinking here in terms of this, there's decisions to be made, and you and I as lenders, we're not out there helping the buyers make those decisions. Claudia, when you're going through that, are you advising the client to make sure they're staying within the scope and doing that? I mean, a lot of what we'll see, we've all driven down the road and you see the billboard that says, hey, starting from the mid 400s. And yet we as professionals know that's weird. Every contract I see coming out of there says $650,000. I don't know what the $450,000
there's a difference between base price, which is what they advertise, and then the price after you add everything. So I would say in the last few years, maybe like the last 5 years, a lot of builders in Southern California, from the builders that I've worked with, are starting to be more inclusive of upgrades. So really the only upgrade that you're doing is just in materials and not really other things. I don't want to say builder names, but I was just at a community out in Valencia that it was really, really upgraded compared to another builder that I've seen that really every little thing is an upgrade. So it really depends on the builder also. So if you're somebody that's looking for high-end finishes and all of that, you might not want to go to, I'm not going to say it.
Yeah, we don't want to get cease and desist letters from specific builders, and it truly does. So when we talk about this and say new construction, it's all over the place. Depending on where you're at in the country, you may have small local builders that are building 3, 4, 5 homes over here, and you might go to a development that is a big national builder that has 700 homes that they're building. So we talked a little bit about the design studio. Alexis, does it matter? I mean, some of these developments you get premium lots, whether it's a big cul-de-sac, whether it's a view lot. How often does that come into play, and what impact does that have on pricing?
It has a big price. Okay. So if you're backed up to a pond, if you're in SoCal, you're on the beach. What do you think? You've got a water view, you're going to pay. Okay. You're backed up to a green space. If your lot is big, here in Tennessee, we have big lots. So if you're on, a quarter of an acre, a half acre is going to cost more. If it's a corner lot, you're in a cul-de-sac, or here we call them coves, you're going to pay more. Those lot premiums sometimes can increase the deposit. Also, it can increase the overall cost of the house. What you've noticed, and sometimes you maybe even seen in vetted VA, people will paste the first page of their builder contract, and they'll have a base price, and they'll have the lot premium. I've seen lot premiums as low as $500. And I've also seen them as high as, 25, 30,000. It just depends on where the house is placed. Keep that in mind when you're looking at houses. All right. Try to have the builder, the superintendent, the foreman, whoever, go out there. And if whatever model you're considering, have them flag the property to see how that model would lay out on the lot, because it sounds, in the big scheme of things, depending on where you are in life or trying to buy this house, if it's just you're here temporarily, or is this something you're going to be in, forever, or just 7 to 10 years, you might not need to spend the extra $30,000 for a lot, when you can have the lot, a few lots down that's similar and, much cheaper. So just be mindful of that, because again, like Josh said and Claudia said, when you're driving down the street, you see signs that say, come on in, you can get under contract for this price. But typically there's always gotchas, the added prices for all the extras that come with the house, including lot premiums.
Well, something that's really unique about new construction is that ability for the same house. So we say the builders have pretty much decided on this lot, we're building this house. So bed and bath count, square footage, you go, okay, well, that's going to account for the price of the home. But we talked about design studio. You can do elevation changes. You can do any number of things. So from that perspective, Claudia, when you're working with someone, how do you advise them? Because Andy was mentioning the appraisal. So again, you're like, well, that's the house. You're like, well, no, it's going to cost a lot more and possibly appraise for more or less. There seems to be more of a risk with new construction where you really could over improve one. A builder's not really going to tell you, no, we're not going to keep adding cool things to this house. They're going to let you add to that as much as you want. How do you advise buyers to make sure they're not overbuilding for the neighborhood they're in?
There's a lot of things that some builders have as an upgrade that really could be done after you've already closed on the house and now it's your house, that you could do yourself. For example, if you have a guest room off the entrance and a bathroom, but it's not a bedroom with the bathroom in the bedroom, that's a minor change that you could do after the fact. But the builder's going to charge you like $7,000 to $10,000 if they do that change for you, because it's a change to the floor plan. So just having experience and knowledge of like all of the little things that you could do yourself is going to save them money, and just really being that person who, I hate to say it, but kind of like keeps them on budget.
Absolutely.
Yeah, like we talked about earlier too, very often they've got a non-refundable deposit. So yeah, they're going to let you go ham in that design studio, because worst case, you don't buy the house and they keep your 20, 30, however many thousands of dollars. Sell it to the next guy. Hopefully he likes purple cat.
Yeah, I always, I'll just remind my client, if it's a builder that I know charges for every little thing, I will tell them that, based on my experience, this builder is going to charge you a lot. So when you go in, make sure that it's only the things that you absolutely need and that you couldn't do yourself.
Andy, let me ask you this.
I have something to add. Sorry, I have something to add to that about the updates and upgrades and appraisal, right? If you're building from the ground up, you're picking out the lot premium and the model that you want and the home and all these upgrades, your home might take 6 to 9 months to build, and you don't know appraisal. This is regardless of loan type. It's good for your agent. So if there's a professionals watching this, ask the builder's rep what's under contract that's going to be similar, because you're already pricing out the house. What's under contract that's going to be similar to this one? When is it closing? All right. I had one recently that was totaling up to what my clients were spending on the house, and it was a cash deal. So I knew that's going to close before mine, and it's a cash deal. So obviously, they weren't getting an appraisal or anything. So it would help my clients build going, because builders are constantly raising prices for things, especially when you build from the ground up. So the price today is, 6-9 months before you close, is going to be different from the homes that are closing like within the next month, right? Because does that make sense? Because they've already closed. So
it could be a different phase too. Every phase goes up in price as well.
Exactly. Right. You got to be mindful of that early on. So have that conversation with the builder's rep. Buyers, be there with your agent while they're having the conversation, or ensure that they're having that conversation, just to make sure you're protecting yourself. You don't easily overpay and then risk a low appraisal.
And you can tell from this conversation, it's been almost 15 years since we've seen a down market. The appreciation has varied from flat to mild to crazy over the last 15 years. But there are points in time where maybe the next phase is cheaper than the last one. I've got a buddy who developed a bunch of homes in the late 80s out in the Palm Springs area. We had this S&L crisis, and he was just imagining that each one was going to sell for $100,000 more than the last one. He found out the hard way that isn't exactly the way it works. So on the positive side, when you're trying to plan and be a buyer and put something under contract, we haven't had problems with appraisals and with prices falling out for quite a long time. And it's probably not likely to happen. But it kind of goes back to knowing that contract and knowing what happens. Well, what if you take 9 months to build the house and the market's 5% lower at that point in time? It can be an issue. Builders are very good at managing to this and making sure it's not a problem for them, but it can be. So something there to be aware of. Andy, what I was going to ask you, we're kind of talking about people over improving and making a home so nice that it's hard to appraise. But what about the frugal guy or gal that goes in and goes, just give it to me basic. I don't want anything. Don't do anything. Is there anything from the lender's perspective that we're requiring? Do we have to have, fences? Do we have to have a front yard, a backyard? Do we have to have window coverings? Is there anything, assuming that the builder has a certificate of occupancy where you can move into the home, from the lender's perspective, is there anything that we need to be aware of that the buyer has to have?
I've got to say, I've never run into anything that doesn't meet minimum property requirements, because really it's fairly minimum. We're talking like running water, appliances would be something that someone could not put in there. But I've never run into anything that didn't meet minimum property requirements. What I have seen is sometimes, people will have stuff that's in the contract that's not done yet, and they're up against a timeline that's going to have delays. So most common being sod. Well, if the sod's in the contract and they're saying you got to close by Friday, you're over $500 a day, the lender's going to say the contract isn't complete yet. And I've had a little back and forth there where a lender's saying, hey, you didn't fulfill the contract, we're not willing to close. And the builder's saying, hey, we've got everything but the sod. We want you to buy this thing, or we're going to charge you per day. So that's something I've seen come up. But I've never had it not meet MPRs. I don't know about anyone else.
I think for me, most of the buyers who are price conscious are thinking more of, do I need to get that flooring? Because I'm going to change the flooring later. And it's one of those, you can't let the builder put in their, builder grade materials, and then you can upgrade it later. But you do need all of that to close.
And that's something that comes up fairly often. People are always asking, because we talk about that design center, they're trying to charge 2 and 3 times what you can get it for on your own. So it's something very, very common that comes up. A different question that we get all the time on my live show that we do Wednesdays, people say, hey, it's new construction. There's going to be city inspections. There's going to be the final certificate of occupancy. Do I need to do a home inspection? Alexis, Claudia, how do you advise your clients? Do you still say, hey, yeah, it is a brand new construction home, but do you advise your clients to do a home inspection on new construction?
Yeah.
Yeah,
Absolutely. Yeah.
definitely. I mean, even
Absolutely.
though it's brand new,
Yeah.
And
still,
how does that inspection vary? Because you're not going to come across things that are in disrepair or falling apart, but what types of things do you see on an inspection on new construction? Because I've seen enough of them to know that even new construction homes, it doesn't come back, hey, here's your rubber stamp, it's perfect. Those inspectors are still finding some issues with new construction homes.
I've seen all kinds of stuff. I'd say this, the majority, nothing's wrong. Nothing's wrong. But the stuff I have seen, it's been serious. Like, for example, very recently, I just had during a home inspection, the buyer was a little hesitant to get it. And the truss had been modified. So the truss is kind of like at the top of the house, right? And sometimes they have to modify it to put in the HVAC and things like that. I'm an agent, not a builder. Okay. But I'm just explaining. Anyway, they had to modify it. I've seen this before. When it came up on the inspection report, I was like, okay, no big deal. What's required is a structural letter from a structural engineer, just kind of saying, hey, this modification has been done, but everything's good to go. So gave it to the builder's rep. That is a positive in new construction. Sometimes repairs aren't, it's not like a traditional sale. It's really not negotiating so much. If something's really broke, it's broke. Okay. And the builder's going to fix it. But back to it, the builder was kind of dragging their feet about this truss and not getting it repaired. Come to find out, ended up being a $10,000 repair that had to be completed a couple of days before closing. How my clients not done that? And they stayed in the house in 5-10 years. There started to become a sag that eventually would have given in, or when it was time for them to sell and someone did a home inspection, that new buyer coming along did a home inspection, they would see it. So it's very important. I've also encountered other roof issues inside, depending on the time of year the roof was laid, a foundation issue once. Foundation issues related to warranty. You're going to want to make sure that the builder has a warranty. I know for VAs required for a 1-year warranty. Some builders offer something called a 2-10 warranty. That's going to vary state to state and builder to builder. But there's been serious stuff. Also termite. Typically new construction, depending on the region of the country you're in, if termite's even a thing, only the soil is treated. Not the structure itself, because that's all that's required for VA financing is the soil to be treated. So sometimes they'll say, oh, we got a termite contract. No, you don't. Okay, you do not have a termite contract. So get a termite inspection too, just in case you do have termites. Because once the deal is done, all right, everything's closed. Nobody's gonna care that you didn't do something. Protect yourself.
Well, with that, why don't we talk about the deal's closed? Just before it closes, how does that final walkthrough, Claudia, look like on new construction versus an existing resale home?
So there's different walkthroughs. There's the walkthrough with the builder and the builder's foreman to go through and do the blue tape. And then there's the other final walkthrough. Then there's one for if you're buying a smart home, which a lot of them are, but there's some that are more smart than others. Then you have that walkthrough where they show you all of the features of your home. So it's really just going through and making sure that everything on the home inspection or whatever it is that you asked to be repaired has been repaired, and everything that you noted with the blue tape has been taken care of. But going back, I mean, I've been very fortunate to not have major issues. We've seen like cracked tiles, some things that really weren't done up to code as far as electrical, but really nothing super major that would have been a bad thing or a huge repair. So that's the good thing about having a home inspection. It's really an added layer of peace of mind for the buyer.
But maybe just the only time that you can ever see the bones of the house. I mean, my house that I bought was built 20 years before I was born. I have no idea what's behind those walls and if they did it right. And I mean, the lights turn on, the AC works, and I think it's fine. But that would be awesome if I could have seen it being put together and make sure that it was done right.
And you can get inspections along the way. Do check with the builder, check with your real estate agent if that's something you want to do, especially if you're building from the dirt up. You could do a pre-drywall inspection, a foundation inspection, plumbing, electrical, all along the way. You can do it. Just make sure that you have clear communication and expectations set with not only your agent, but also with the builder. Because you can't just pop up at the new construction site or think that the builder is just going to be there because you want to show up Tuesday at 3 p.m. Always try to schedule ahead of time. But typically You can absolutely get inspections along the way for every construction phase, not just at the very end.
Can you just give us a quick overview? You touched on it very briefly, just the warranty, but what is the difference? I mean, if you're a first-time buyer, you don't have any experience with a home warranty, but a lot of people have an idea. We see the commercials. They try and sell people that own their homes a home warranty. And some of the pitfalls with that is your standard home warranty. It's insurance. It has high deductibles, and it really helps you if it's catastrophic. But it's a little different with a builder warranty. Tell us just a little bit more about the builder warranties and how they vary from a standard home warranty.
So a builder warranty is something that the builder specifically is giving you and they're overseeing it. Okay. Depending on the size of the builder, it can be something as they'll have a warranty department. I mean, you get a big national builder, they're going to have a warranty department, an 800 number. You're going to be signed a case number. It's going to be seen really official. Okay. And if the smaller the builder, you'll just call the builder directly, but they'll come in and they'll take care of, at the 11th month mark, they'll take care of painting, minor settlement cracks, things like that. You start having significant issues, then they'll put a warranty claim in to have a contractor or a vendor. So the same vendors that built your house, they'll come back out to make the repairs. However, for your HVAC, hot water heater, things like that, your major appliances, your ovens, microwaves, dishwashers, if something's wrong with those, often they're going to fall back on the manufacturer's warranty, depending on the builder. Okay. Also, some builders will tell you up front, and if they don't ask about this, understand that new construction, no one's ever slept in the house. No one's ever ran the dishwasher, took a shower, washed clothes, flushed the toilet, all that stuff all at once. So sometimes within the first 30 days, you can start having weird things go on, even if you had a home inspection. Okay. Again, this is a house no one's lived in. Some builders will say the first 30 days will cover everything. Call us, come track us down in the community. Others will say, even if it's 2 hours after closing, call the warranty department. So it's going to vary. Now, a regular home warranty, it's like $650, anywhere from $500 to $750, maybe more if you have a pool or a septic. You call an 800 number for $65, $7,500. Somebody comes out 2-3 days later. If they pay to fix it, great. If they don't, nothing you can do about it, but with the builder, you started developing like a significant crack, like the size of your pinky up the wall, something like that. And you're within that 1 year warranty, or if they had a 210 warranty, then you would contact them and they would take care of it. Whereas for a pre-existing house, let's say a house that's 10 years old, you start seeing a crack, as big as your pinky going up the wall, you're going to have to call a structural engineer yourself. Okay. So I hope that explains it.
So is it safe to say that if I'm getting a warranty on a resale home, I'm worried about things breaking down, falling apart, not working anymore? And on the new construction, I want a warranty to make sure that you could have a defect in your dishwasher or the builder built something wrong. It's just to make sure that I'm getting what I'm expecting to get, where on that older home, I'm wanting to make sure that nothing breaks down on me in the first year or so.
Yeah. I actually had a client that they did an inspection 10 months after they were in the house, and they found a gas leak. And it wasn't a major one, but the CO alarm went off that their inspector had, and it was behind the dryer. It was solder just wasn't totally complete, and the builder came out and they fixed it. And it would have been a big pain for them to cut the drywall out and do it on their own, but they caught that. And that's the type of thing you're going to see with a builder warranty.
All right,
I think
Andy. Now,
the warranty the builder provides is also there to make sure that they are taking care of the homeowners, because that is their reputation on the line too. So it is to their benefit to offer that and ensure that they're taking care of their product, especially if it's something that's brand new. On a resale, on resale, that's more of the peace of mind for the buyer. If there's any issues that come up because the house has been lived in, they just call the home warranty. There's a service fee, and it's also peace of mind for the seller that the buyer's not going to go back to the seller and say, hey, you need to come back and fix this 3 months later. That's not to say that buyers don't do that, but you have the home warranty, and you can just call the home warranty.
So Andy, here's the fun one for those of us on the loan side. What is going on with the builder incentives? The question that I get is people say, well, why are your rates so high? The builder said they could get me 1% lower. They also said the builder's going to give me $15,000. Can you give me $15,000 also? What's going on with those incentives, both in the form of closing costs and rate buy downs?
Yeah, so there's a number of ways that they do it behind the scenes. Sometimes they own the mortgage company, so they're making money that way. Sometimes they buy big blocks of mortgages ahead of time, so they're getting rates that may not exist now because they bought them in the past. But bottom line, they've got some sort of relationship with that lender, and they're incentivizing you to use that lender. A lot of times, I'd say even most of the time, it's a good deal. You're looking at either a lower rate or a lot of incentives that they're giving to you. But there are some times where they're going to say, "Hey, we'll give you, $10,000 to buy down your interest rate, or $10,000 in extra upgrades to use our lender." But then when you look at it, that lender is $15,000 more expensive than you could have found out on the street. So yeah, they're giving you a $10,000 discount on something they already overpriced by 15 grand. So again, many of the times it is a good deal, but it's always worth checking to see what's the market at. Am I really getting a good deal? And this is another spot where having a good realtor can help you before you sign that contract, because sometimes in the contract it says you have to use our lender whether or not we're competitive. And again, they'll do that, $5,000 off a deal that's already $20,000 overpriced. And you say, "Hi, I got you. I'm going with my guy." Well, too bad. You can't.
I have an example, a buyer who was working with down in Texas, that he actually reached out because he was so just infuriated by the builder's loan officer. Now, I've never seen an attitude. A builder's lender, you have to realize that when you have people highly incentivized to use you and they're forced to talk to you, it's kind of understandable that they're going to have a little bit of different customer service versus if you call Andy or myself and we're trying to earn and win your business. But this was like, the borrower forwarded me a couple of emails. I'm like, that is shocking. Basically, he was told, "You're not going anywhere else. You can't get this deal." And he's looking at the numbers. He's like, "These numbers don't add up." He's like, "You're telling me I'm getting a $20,000 credit, but you're saying it takes $15,000 to get the rate that my guy's telling me I can get for free. So really, you're giving me a $5,000 credit." And that was exactly what it boiled down to. And he got really close to pull the plug on the guy. He goes, "I will pay $5,000 more just to not deal with you because you're a liar." And that's not, it's not to say, so I'm sure, Andy, you get the same stuff. People are always asking, "Is this smoke and mirrors? Is this a lie?" What is it? It's not a lie. The numbers, like Andy said, are usually a really good deal. I have a friend here in Southern California from high school. She calls, says, "Hey, I just got a 50% pay raise at work. I've never owned a home. I want to buy." So we get her pre-approved. She goes out looking. And of course she comes back, "Hey, I got a house under contract and it's new construction." So I said, "Okay. So what are they offering you?" She goes, "They're giving me $30,000. So I look at it and I go, "Okay, well, let's take their loan estimate here and look and see what that $30,000 amounts to." They were telling her that the rate cost $15,000 more than what it would cost me to get it. But explained to her, I said, "Okay, so let's say they're $30,000. Take away the $15,000 they're overcharging you. They're still giving you $15,000. I love you. I've known you for 25 years. I am still not going to give you $15,000. So it's a great deal." So some people choose to be mad that it's not really $30,000 when the reality is, okay, there's some smoke and mirrors there, but it is a significant sum of money in most situations. So I'm sure you give the same advice. Andy was like, "Let's just compare it. Let's just pencil it out," because the last 3, 4, 5 years, or at least from 2022 onwards, those builder incentives are so big that most of the time it is the right direction for the client to go.
Yeah, if we were having the same conversation 4 or 5 years ago, I'd tell you it's probably a 50-50 whether that's a good deal. But lately they've been better, and it can vary from builder to builder too. There's, I'll pull a Claudia here. I'm not going to name names, but there's one that's out there that's kind of notorious for giving you $15,000 off a $20,000 overcharge. And like you said, at the end of the day, it's numbers. Our business is pretty straightforward. It's facts and it's numbers. And if they're giving you a better deal, I'm glad that you checked it. Now you can sleep good at night knowing that you got a good deal.
Absolutely.
I think in Southern California, I think it's a big deal because, new construction is required to have solar, whether you buy it or lease it is something else. But if the builder is giving you, like your friend got the 30,000, that could also help to offset that the solar loan. So, it's hard for other lenders to compete with that. But I recently had a closing where my buyer insisted on using his own lender, not the builder's lender, and the builder still gave him $25,000 that they applied towards his solar. So those incentives are really, really important. And if you don't use it to buy down your rate, you can use it for other things like upgrades, or in California, like your solar panels, because you're going to have them.
Something that you said there is really important, in that if you don't ask, the answer is always no. And most things are negotiable. Like the builder is going to tell you, no, you're only going to get the incentive if you use our lender. But if you fight, scratch, and claw, they might give you something, and you might get to use your lender and get $5,000 or $10,000. I mean, they know what their true net cost of those concessions are. But oftentimes they want to make a sale, and it comes back to that supply and demand. If there's 5 houses and 1,000 people want them, they're going to tell you to pound sand. If there's 5 houses and 4 people want them, they want to move the 5th one, and they're going to work with you.
So one thing I've run into as well, where we did get the builder incentives and I was able to do the loan, the builder wasn't able to do the loan as they pre-approved the borrower for. They actually declined the borrower. So they came to me because they told them they couldn't get the house. Now, this goes into not all lenders are created equal, which I hope our viewers from being in Vetted VA know that just because one lender says no doesn't mean no one can do it. So the buyers came to me. We're still able to get the deal done. This was one of the big national lenders that put their feet down and said, well, you don't get the extra money that we were going to give you. We had to show them that, no, you gave them this along with a pre-approval saying that they could do it, and then you denied it. So we did have to fight a bit. Actually had a good agent on that one too, who put their foot down as well. And we were able to get them the money and get them the deal done. And I know the builder wasn't too happy about it, but again, at the end of the day, they sold the house. I know they didn't lose money on the thing.
I think that's where it's important also, is if you have a special circumstance, like one of my buyers, he was going through a divorce, and his own builder was going to be able to work with all those parameters, not include the soon to be ex-spouse and stuff like that. And the builder's lender wasn't experienced enough in VA loans to know what you can and cannot do in those type of circumstances. So I think that's where it's very important to have your own lender, regardless of if you're still going to go through the builder or not, because you might have a special circumstance that they might not be able to handle, or they don't know how to interpret what's in the VA lender handbook.
Yes, and sometimes the builder's lender is not a lender that shares the name as a builder. Sometimes the builder's preferred lender is somebody local who you could go meet down the street for coffee face to face. Sometimes it's not a company, it's a specific loan officer too. Okay. And you go into the model home. Sometimes builders, I've seen it where they have like 6 or 7 different lender names. So, if you're unfamiliar with the process, you go in, and remember, everybody's a stranger, and the only person looking out for your best interest is going to be you. Okay. So just because the lenders doesn't share the same name, or they're not employed by the same big builder, doesn't mean that they're not working for you. And, Josh and Andy, can we kind of like touch on something that sometimes happens that I see happen more in new construction than I don't think I've ever seen it in pre-existing. But if you're building from the dirt up, you're 6-9 months out before the home is going to be completed. Nobody can lock you in with a rate that early. Okay. So you're shopping lenders early on to get pre-approved, because you still have to be pre-approved even though the house isn't built. Understand that when you're buying new construction, you still have to be pre-approved if your house is going to take 6 to 9 months to be built. But when you're shopping for lenders, sometimes in the builders giving like a $20,000 incentive, sometimes what I've seen is, and you're already pre-approved. Let's say you're pre-approved with Andy, and Andy's giving you this great rate off today's market because that's all he can do. He can't predict the future. He doesn't have a crystal ball. And you go and you're shopping this preferred lender that the builder's pushing off on you. And that builder's saying, oh yeah, well here today, this guy's giving you, 5, I'm going to give you 3. And you're like, well, I'm going to go over here to 3 because they're jacking rates up to make it look like they're going down a little bit with a discount, right, guys? Do you guys know what I'm talking about? How they'll do that? They'll say, we're applying a discount. This is when you're first going under contract, getting pre-approved with the builder. Because remember earlier in the live, we talked about sometimes these contracts say that you can't change lenders. Okay.
Right.
It's something to be mindful of when they're talking about smoke and mirrors, like in, easy, simple terms, that this is kind of like a sales tactic. Some lenders that are partnered with builders do, where early on, 6-9 months before, your home is completed, you're trying to get pre-approved, they'll make a fake rate sheet. Have you guys ever heard about this? Because it's something I encounter sometimes.
Most of our stuff, Southern California, are the big national builders, and they're less likely to do it versus a local or a regional that is a little more fast and loose with the rules. But how about you, Andy?
I see them play with the pricing. Yeah. I mean, when I was showing that new construction, it was 655, and then when we went to the community, they had dropped it to 635. But before that, it was like 635 already. So they go up and down, up and down. I don't know, what formula they use for that, but yeah, they do. They mark it up and then they bring it down. They mark it up again.
Well, that just comes down to one of the big things with lending, whether it's new construction or not. When you get a quote, if it's not a locked loan estimate, it's just that it's an estimate, and rates can change, whether they were playing funny with the numbers and showing you lower discount points than reality, or whether the market changes. If it's not locked, it's not real, and you can't count on it.
If it's not locked, it's not real. And another thing we talk about here in Vetted VA all the time is trust but verify. You're not even necessarily having to trust the builder's lender. You're being forced to kind of work with them, but verify, reach out, talk to 1 or 2 people, especially on VA loans. Conventional loans, they're all pretty consistent. You don't see the big variance, but you get into government loans, both FHA and VA, you see some big differences. And it's more important. Like FHA loans are common enough that most of the builders lenders are pretty good at them, just like they are in terms of conventional. They know the guidelines, 47/57 debt to income ratio. There's way less guardrails with VA loans. There's just we have more flexibility. We have so much more that we can do, and so many more gray areas in that handbook. Like, we are constantly calling the regional loan center saying, hey, how would you interpret this? How would you look at this? And I can assure you, the person that's sitting there taking orders for the builder, they're not doing that. They probably don't know what the regional loan center is, much less actually willing to do it and fight for you. So it's more likely on a VA loan that you'll have that experience than almost anything else. Andy, why don't you walk us through the other big difference on the loan side? When we have a normal transaction, you go out looking, you get a contract, and we're going to close in 30, 45 days. So that lock decision or discussion is a pretty simple one. Now we got a 6, 9, 12-month build period under contract. How does that change that lock timing and decision?
Yeah. So when you're locking a loan, the easiest way to look at it, that lender is essentially setting that money aside for you. Now, in more technical terms, they're hedging against that. But for all intents and purposes, they're taking that money, they're setting it aside and saying, this, $400,000, we're going to set aside for you to use to buy your home. And we all know there's value in time as well. So the longer that you're locking that loan in, the more expensive that it is. So if you're saying that to someone that, if you lock a loan with me today and you close in 30 days, 5.5 is your rate. However, if you want to lock that loan today and we're not closing for 6 months, we're going to be looking at, and I'm just making up numbers, we might be looking at 6 or 6.25. Now you add on to that, going to something we talked about earlier, they can delay it. And it's often that they delay it. So we get that 6-month lock in there that's already higher than market, and then they don't close on time and we have to extend that. You got to pay more money to extend that as well. So a couple things that you can do to protect yourself there. You can renegotiate your rate with some lenders. So that's something important to ask, whether you're working with the builder's lender or your own lender. What's your renegotiation policy? Some lenders just say, no, we don't have it. You locked it. That's what you get. Others will tell you, I think the most common that you'll see is that they'll split the difference. So meaning if you locked at 6 and rates go down to 5, hey, we can't, lose our shirt on this and give you the 5, but we'll give you 5.5. We'll split it with you. But the key is, what's going on. And then as a consumer, you do also have the choice to float your rate. So what floating the rate means is just that you're not locked in. It's going to go up, it's going to go down until you tell your lender, I want to lock this in for 40 days or 60 days, whatever it is. It's going to go up and down with the market. So that could work out in your favor. It could be more expensive. Now, the only constant that's there is the cost for locking at a different length. So a 30-day lock will be cheaper than a 60-day lock. But that 30-day lock 30 days from now might be more expensive because of what the market did.
And hopefully we're on the right side of this for 2022 and 2023. Both very interesting time periods for people buying new construction with long build times, because not only did rates spike, we had these dips and you're like, oh my God, rates are down 0.5%. I want to lock, but we still don't know when your house is going to be built. We had people that had a lock and the builder, couldn't get toilets. So it's 60 days more before it closes. So hopefully we're on the better side of that. We'll probably have that discussion on here on a future episode of what's coming with interest rates, but hopefully the worst of it is behind us. We're sitting here at 55 minutes. We like to keep these to an hour, but this is a big topic. We probably could do 2 hours on this. But before we wrap it up, would love to give each of you sort of your chance for a parting shot, final pearls of wisdom related to new construction. So we let you go first. So we'll let you go first again on final thoughts, Alexis.
All right, final thoughts. I know there was a lot of cautious talk, right? Be careful of this, be careful of that tonight. And you do have to be careful in new construction, just as you do in pre-existing. However, if you're presented the opportunity to buy new, go for it, okay? Because new homes are nice. You can make it your own. It's a fun experience. Take pictures along the way, but also protect yourself. Ask questions. Remember, you don't know what you don't know. If something starts seeming suspicious, if the numbers seem funny, then it's probably funny. All right. You got to do what's best for you. Please do review the contract prior to going under contract, prior to signing anything, and definitely prior to delivering any funds. Make sure you read the contract thoroughly, just so you can protect yourself.
100 pages of light reading, Alexis, 100 pages of light reading. How about you, Claudia?
My final thoughts, this one's for buyers. I know new construction is brand new, but you also have to take into account all of the additional fees, like the HOA. The property taxes are probably going to be higher. Special assessments are probably higher than a resale. So you have to really weigh the resale versus the new construction, not just because it's brand new, but all of the other fees that are going to affect your mortgage payment. And on that note, for the sellers, I know we might have some sellers here that are in competition with new construction communities. You cannot be pricing your home the same as a brand new construction house when your house has been lived and loved and needs some repairs. So I always tell my sellers that are near new communities, if they're in between phases, like maybe the builder has just a few left or they don't have any standing inventory, then that's a good opportunity for the seller. But if they have inventory, then that seller needs to be a lot more competitive than the new construction. So those are my thoughts.
How about on the number side, Andy?
With all of this, I think I'm kind of echoing everyone. Just, go into it knowledgeable and educated, whether it's the house itself or the numbers. You're all members of our community here at Vetted VA, so you've got a resource to ask questions, but have a local professional that you can ask questions to. And like we talked about with the numbers, they are what they are. Double check that lender. With a local lender that you trust to make sure that it's a good deal that you're getting. And again, just go into it with the knowledge and like Alexis said, have fun. I mean, it's super cool. I've bought some great used cars in my life, but man, there's nothing like that new car smell. I've never bought a new home, but I can imagine you get that same feeling and you customize it all how you want, straight from the factory, so to speak. So enjoy it, have fun, and understand that you're getting into a pretty big undertaking and just enjoy the ride.
Absolutely. I was going to underscore basically what all of you said. On the real estate side, please make sure you have a realtor representing you. Complex, a lot of moving parts. You hear the knowledge and expertise that Claudia and Alexis have. Make sure you're working with a realtor that's not your aunt or uncle that have a license, that is actually out representing people who have been through this process, so they can walk you through all those pitfalls. They can help you interpret that 100-page contract. It's important, and for the most part, it doesn't cost you in that transaction. We'll see how that happens a year or two down the line. But on the loan side, to also say, if you call me, if you call Andy, and we know you're going to buy new construction in the current market, there's an 80-90% chance that we're not going to get to do a loan for you. But you're never going to go back and refinance or do your second loan with the builder's lender. You need a mortgage professional. So we are always happy to have that conversation and start building that relationship. And it's numbers, it's a spreadsheet. We pencil it out and we can show you, what are they really crediting you? How much are you saving? Or possibly there's nothing there in terms of savings, and we can do something better, or turn around a denial that the builder's lender says you're not able to be approved, when we can take care of that for you. So get professionals on your side, go through the process. Appreciate all three of you for being here and sharing your knowledge and expertise. We will be back next week with another topic and another set of experts. Until then, trust but verify, and we'll see you guys again next week.